Howdy out there, folks. This is Darius Dale here to present our macro minute for Wednesday, April 13th, 2022. Starting with markets, we have stocks mixed this morning with the U.S. leading into tomorrow's OPEX. Pull forward to Thursday. We have Good Friday on Friday. Markets be closed. Commodities up, crypto up, dollar flat this morning. Global bond yields mixed. A lot of market moving headlines this morning. So starting with the first category, we have a bad start to earnings season. JP Morgan Chase fell in pre-market trading after reporting lower than expected quarterly revenue in its investment banking unit. The Euro Stock 600 slipped with retailers leading declines after Tesco warned its profit will be squeezed amid the UK's cost of living crisis. The UK inflation this morning surged to a 30-year high this morning. Got tighter global monetary policy ahead mostly. New Zealand Central Bank delivered its biggest interest rate increase in 22 years, hiking rates 50 basis points there. Yesterday, Federal Bank of St. Louis President Jim Bullard said that U.S. monetary policy needs to be tightened to a point that it curtails economic growth, or policymakers will end up risking their credibility. I happen to think they've lost a considerable amount of credibility thus far. Pretty sure most of you watching the program agree with that. But at any rate, he supports a half percentage point increase at the next policy meeting in early May. And then he also followed that up by saying rates should move up sharply after that. BOJ's Kuroda bucking the trend there. He came out with a statement overnight saying the BOJ is going to sustain support for Japan's economic recovery with, quote, powerful monetary easing. So no, it's unlikely we're going to see an increase in the BOJ's yield curve control in terms of the cap on long end interest rates there. And then shifting gears to geopolitics, oil's up this morning after Russia vowed to continue the war in Ukraine. China partially eased COVID curves, but they got a lot of work to do on that front. The IEA took down its estimate for the decline in Russian crude output for April as the nation's been able to sort of shift gears and sell oil to China, who's building stockpiles currently. Treasury Secretary Janet Yellen out of the U.S. Will warn governments today for sitting on the fence. This is pretty harsh language with respect to the international effort to sort of punish and sanction Russia. And she said, quote, any moves to undermine sanctions would draw the ire of U.S. and its allies. I'm not sure what that actually means, but certainly shaking a mean finger is probably at the low end of that range. Then Germany, after that, warned that it could face a $240 billion, 220 billion euro hit to output over the next couple of years in the event of they saw an immediate interruption in Russian energy supplies. So the fact that they're actually tossing out these estimates tells you we continue to move down the path towards sort of really ring fencing Russia from an energy supply perspective in Europe. There's still some mixed feelings about that across the continent, but obviously Germany's the lead dog there. And then lastly, the Biden administration is preparing a new military aid assistance package for Ukraine worth $750 million. Not a ton of money in the grand scheme of things, but certainly continuing to support Ukraine, continuing to prolong this war effort that, oh, by the way, is not over. Certainly, there was a lot of hopium involved in financial markets in the past kind of month or so associated with this kind of wrapping up, but it's obviously continuing to get worse. Big movers this morning. WTI up 2%, Ethereum up 2%, and then a little bit more follow through in what we saw yesterday in terms of repricing the overnight index swap forwards curve. These are bets on where the Treasury Fed funds rate is likely to be in 1 year and 1 month forward time. That's down 7 basis points this morning. It's down 23 basis points week to date. So the market is saying we're getting closer to the peak of inflation. So let me price out some of the more aggressive policy tightening that we're going to see in a year's time. But again, the path over the next year or so remains quite hawkish. Getting into the charts here. U.S. dollar that remains bullish from the perspective of our volatility adjusted momentum signal. It's got 0.5% downside, or sorry, minus 1.3% of downside in its probable range with 0.5% of upside. Gold still neutral VAMs there, minus 4.4% of downside versus only 0.8% of upside in its probable range. 10-year nominal treasury yield that remains bullish VAMs with minus 32 basis points of downside versus 14 basis points of upside in its probable range. High yield OAS that remains bullish VAMs. You got 37 basis points of downside with 16 basis points of upside in its probable range. S&P 500 broke the neutral VAMs as I presaged over the last couple of days. Now you got a little bit more sort of a normal distribution in the probable range with minus 0.9% of downside versus 5.2% of upside. VIX remains bearish VAMs with 40% thereabouts downside in its probable range. Is at the upper bound of its probable range, but if it doesn't go back to neutral, we'll see a little bit more positive skew there. So keep your eyes glued there over the next couple of days. NASDAQ 100 neutral VAMs minus 0.3% of downside versus 9% of upside in its probable range. Russell 2000 neutral VAMs minus 1.7% of downside versus 6.5% of upside. Bitcoin neutral VAM still minus 2%, or sorry, is at the lower bound of its probable range with 19% of upside. Ethereum neutral VAMs minus 2% of downside versus 18% of upside in its probable range. Shanghai Composite bearish VAM still minus 3.6% of downside versus 3.1% of upside in its probable range. WTI crude oil neutral VAM still minus 12% of downside versus 13% of upside in its probable range. Sort of backed off that trend line we talked about last week. This is the real truth in crude oil, in our opinion. We do believe that's the support. If we see a break of that support, obviously that's telling you that we're going to see some demand destruction over the near term. We're not sure if we're quite at that point yet. In agriculture, neutral VAMs minus 6.2% of downside versus 1.1% of upside. And then industrial metals in the middle of its probable range. Neutral VAM still there, minus 4% of downside versus 6% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, April 13th, 2022. Best of luck out there today.